Okay. Hi, Christelle. How are you?
Cindy, how are you?
Good. It's been a while.
I know. Happy spring. Is it spring yet?
It's not only I don't know. I think it's spring in a couple of days, but it's St. Patrick's Day.
Happy
Thank,
St. Patrick's Day.
thank you. You too. You could go drink green beer. I would if I drank beer, but I don't drink beer.
Me
So
neither.
okay, awesome. Nice to see you again. We want to talk so many exciting things going on in the market right now. Exciting, scary, like all of that stuff is going on. So I want to talk about, I know that you're getting a lot of people asking you about variables and what to do. So let's talk about that. So you can introduce yourself first, where you
Hi,
work,
everyone.
and we can talk a bit about that.
Okay. Hi, everyone. My name is Christelle Mwamba. I'm a mortgage agent with Mortgage Cat, and I do residential and commercial mortgages. And I am so excited to be part of Sandy's call today. And I want to talk about rates. I was actually telling Sandy that I want to encourage home buyers and homeowners currently right now, even though I can see that the rates are going up, and just educate everybody about how to distinguish what's the best time to get a variable or go fix.
Okay, perfect. Okay, I like that subject because it's actually something I've been thinking about myself for my own personal stuff. So this will be really good. So maybe let's talk, I guess, about what is a variable rate and why do people have these questions?
A variable rate is basically the variable rate is a fluctuating rate, because the variable rate is based on prime, which is regulated by the Bank of Canada. So your variable rate, your payment will fluctuate depending on what prime is at the time, versus the fixed rate is actually determined by the bond market, the yield market. And so that will stay fixed for the rest of the term that you enrolled for your mortgage.
Okay, so let's kind of clarify that a little bit. So when you say the variable rate is based on the Bank of Canada, so this is when we hear stories in the news like we've heard recently that the Bank of Canada is raising the rate. So that impacts the variable rate.
Yes.
Okay.
When the Bank of Canada increases prime, that will impact the variable rate to the borrower who has been enrolled in a 5-year variable rate. So that means that your mortgage payment will fluctuate based on what prime is at the time when it's changed. So the Bank of Canada actually announced that in April. Well, everybody's kind of increased their prime right now. So prime right now, before our last, sorry, on the last chat, prime was at 2.45. And
Yeah.
after we spoke, prime increased to 2.7. So if your mortgage was at prime minus 0.5, your current rate right now would be at, excuse me, sorry, Cindy.
All right.
So your current rate will be at 2.2.
Okay. So you take the prime rate, then you take off the
Yes,
5, and that gives you what your current rate
that's
is.
correct.
So
That's correct.
will your payments fluctuate?
Yes, your payment will fluctuate, but the key thing is also what's really important to know is to find out is, does your lender adjust your payment when prime changes? Because sometimes some lenders don't adjust the payment, so you can end up actually being in a negative amortization because your payment have not been adjusted. So the key thing is to find out which is a key feature, to find out if your lender is offering that option of adjusting the payment once prime changes.
Okay, I get it. So if they're not adjusting the payment, then what's happening is you're paying more interest and less principal, correct?
Yes.
So you have the same payment, but you're paying, okay.
Yes,
And if they fluctuate it, then your payment is going to go up based on that increase.
that's correct.
Okay. Do most lenders, is that an either or thing, or do lenders basically set that up front? Or is that something you could call your lender and say, I don't want my payments to go up?
No, you can call your, what do you mean by if you don't want your payment, if prime increases,
Yeah.
you If your lender does not, you have to contact your lender basically to ask your lender. If your lender does not adjust your payment, you will have to contact your lender to adjust the payment.
Okay, and if you don't want it adjusted, so let's say they are adjusted. So let's say you say, I want to keep a variable, but I don't want my payments to go up. Do you have the option either way, or does that depend on the lender?
It depends on the lender.
Okay, so some just their rules of engagement are no, your payment changes.
Exactly.
Okay, perfect. So, okay, so where would the variable rate affect people the most? Like in what state? Like when you already have a house, or when you have your pre-approval, like where?
When the variable will affect well, it's if you already have a mortgage, Sandy, it really depends on the discount that you have, right? That's when it's going to affect the borrower or the person who has a mortgage. So it really depends on the discount that you have. If you have prime -1 right now, you're still paying prime -1. If prime is at 2.7, you're paying 1.7. That's still an excellent rate. You're still ahead of the market. Your payment are still a lot cheaper than if you were to go and enroll in a 5-year fix, because the current 5-year fix right now and this rate is for a non-insured, it's for an insured deal. So meaning that you're putting down less than 20%. The 5-year fix right now is at 3.29. So you're right ahead, you're ahead. So that's the key thing right now, not to panic because prime is going up. The key thing is to really focus on the discount that the lender has offered you.
Okay, so then it's not necessarily time to lock in. So is it like fair to say that if you keep a 5-year variable, you will likely you'll most likely never pay the fixed rate? Is that right? I mean, unless rates skyrocketed, which doesn't normally happen.
Yes, that's true. Unless prime goes to 4%, then it's time to revisit your mortgage and lock in. But right now, I think that if you're in a variable, and especially if you got your mortgage last year, and right now the discount has decreased, but it's still on par with market, that it's more advantageous for you to actually go with the 5-year variable.
Okay.
What I would say, though, is the people that are renewing, or if you know your mortgage is coming up for renewal in a year or 6 months, definitely this is the time to look at your mortgage renewal, locking in the rate right now or switching to the variable rate. But yeah, I would say the people that should be really worried is those that their mortgage is coming up to term and they're looking to refinance or renew. This is the best time to revisit it.
Okay, I get it. So now let's talk about if you have a pre-approval and you're about to close on a house, what would you suggest?
If you have a pre-approval and you're about to close on your house, find out first what the lender gives you, how many days you have the rate locked in, because some lenders pre-approval, the rate is locked in between 60 to 120 days. So if you have 120 days, you're fine, because most lenders will honor the rate that they have on the pre-approval. Only if rate goes down that they will offer the lowest rate. But if rate goes up and you found a house and you're within that timeline of your pre-approval, you will be honored. The lender will honor the rate that they put on the pre-approval.
Okay, so what do you think? What's the biggest? What are people most concerned about right now, from your point of view? Like hearing what we're hearing about rates and what's going to happen, and the fact that the rates have gone up a little bit. What do you think is the biggest concern right now?
I think the biggest concern is affordability, and affordability is key, because even though the rates are still low, you still now, if you wanted to go on a 5-year fix, your rate is going to be at 3.29. So 2.29, you need to find out, people are worried about, can I really afford the mortgage payment, right? Versus last year, 2% that's a huge difference. So most people right now are really concerned about affordability. Also, you know that house prices have risen and are still quite high right now. So people are really concerned about affordability of the mortgage, because paying 3%, 3.29 on a $500,000 mortgage payment is very different than pay 2.79.
Right. There's a difference in, so I guess for people qualifying, there's a difference in what people would qualify for at the different rates. But most people that have bought a house in the last few years have qualified at the higher rate. Like that's what the stress test was that they brought
Yes,
in
and exactly
2016, right?
yes, and that's what the stress test is there for, because we basically qualify you based on 5.25. To, even though you're not going to be paying 5% on your mortgage, that's our bench rate mark to qualify you. This way we can know how to mitigate the risk if in the event that you're not able to afford. So yeah, the stress test is definitely how we qualify the rate, the mortgage. But again, still, people are still worried, because it's not like you're paying 2%. You're now paying 3.2. We're going in the highs 3 now.
Right. Okay. I see what you're saying. So what would you, I guess everybody's situation is different, obviously, just like when you qualify for a mortgage, everybody's situation is different. So the best thing to do, I mean, obviously you can help people one-on-one if they're not sure what to do. But how do you think these rates, and what do you think is going to happen with rates in the coming months?
I think that I think that rates are going to continue to increase. We are reopening up now, you know. Next week we're going to be maskless. So, and every province is reopening up. So there's going to be more traffic, employment. There's going to be, the employment rate is definitely going to start dropping, because people are going to be able to go back to work. So rates are going to start going up. My prediction, Sandy, is that pre-COVID, we were at this actual rates. We were at the 3% before the first big lockdown. So what is going on is that the Bank of Canada is just being more cautious on how they increase the prime, but even all the lenders have increased their rates right now. So I think that we're gradually going back to pre-pandemic.
Okay, and so pre-pandemic, you're saying we're at right now, what were we at, 3.29?
Yes.
Pre-pandemic for a 5-year.
Yes.
Fixed. Okay, so 5-year fixed conventional, or 5-year fixed high ratio.
Yes.
Which one?
A 5-year fixed high ratio.
High ratio.
We were at 3.19, and then 5-year fixed conventional, you were looking at 3.39.
Why are the conventional rates higher than the
that's an excellent question that everybody always asks me. So the reason why the high ratio rates are lower is because the securitization of the mortgage is actually with the mortgage insured. So it's insured by CMHC or Sagen, which is previously called Genworth, or Canada Guarantee. So then when they securitize the mortgage, they hold the mortgage, versus when it's conventional, it's actually held by the bank. So it's, and then they package all the mortgage, the terms, and then they sell it to the stock market. So it's just it's more costly for the financial institution to keep the mortgage in. So that's why you see the fluctuation between conventional and high ratio.
Okay, that's good to know. What is so you've got the variable rate, which is affected by the Bank of Canada, and then the conventional rates are affected by bonds.
Yes.
Okay, so how does that kind of play out in the market? Like real estate's a hedge against inflation, correct? So if inflation is going up, which it is, does that normally mean that the real estate business or the housing goes up?
So if inflation is going up right now, that means that rates are going to go up right now, right? And we are also in a different circumstances than previously, because we've just come out of a pandemic. And also we currently have the war that's going on right now is also affecting it, right? So gas prices are going, a lot of things are being affected. So that is also playing again with the factor that the Bank of Canada needs to increase the rate to be a little bit more cautious, right?
Okay. Okay, I get that. So what do you think, like, where do you see this going? And yeah, where do you see this going? Then I have another question for you.
Okay, I think the rates are going to continue to increase. What I'm curious to see is because house price curious to see is what's going to happen to the house prices, because home prices have increased a lot. As rate increase, it's going to obviously people are going to wonder if they can afford to make the mortgage payment. So I think that what we're going to all monitor is to see what's going to happen to house prices.
Okay.
Is it going to stay stable, or is it going to decrease a little bit? Are the values going to come down, or are we going to still experience these high values and prices in 2022 and coming into 2023?
Yeah, it's an interesting question, because if you think about rates going up and house prices coming down, there's a lot that plays into that whole scenario, right? And there's a lot that plays into what's coming up, because I think there's a lot of pent up demand with sellers, because there were a lot of sellers who didn't put their house on the market. One, because they couldn't find a property to buy, and two, because they just didn't want to have people in their house. Maybe they had, immunocompromising or worried about what was going on. So I think there's a lot of pent up demand from sellers at this point, and there's still pent up demand from buyers. And the buyers, I think, will increase as well, because let's face it, we haven't had a lot of immigration in the last few years, and there are a lot of immigrants that are slated to come to the country in the next couple of years, and they're highly skilled immigrants who will be looking for houses. Millennials that are of that age of looking for houses. So there's a lot of reasons that this real estate market will be buoyed by those things. So it is a really interesting question, and it'll be really interesting to see how this plays out, because I don't know that we can afford in this province or in this country to let the real estate market fall. Like, it doesn't make any sense. It doesn't make any sense to me. But the other thing is, if you look at rates and you look at buying a property, and if interest rates go up and house prices come down, you're paying the same amount. You're actually paying more for the house over the long term, because the interest rate is higher.
Yes,
so it's a really interesting dynamic. And that's what people don't understand. And when they say to me, I'm going to wait for the prices to come down, well, how much do you think the prices are going to come down? Because if you bought a year ago, like, the chances, the worst real estate crash I've ever been experienced in 32 years of selling is 1989, 1990. And when I got my real estate license, but it took 6 years for the market to go. It went down 20%, but it also took 6 years for that to happen. So if you're waiting for rates to come down in 6 years, how much will you have paid in rent versus getting into a house at some point? So it's not like such a clear cut, dry answer to that question, because there's so many variables around that, right? So that's where you need to have, like, be talking to a good mortgage broker like yourself that can give you every single option available to you and explain things to you. And then that's what we do on our team, is really try to educate you about what happens in these type of situations and what's your end goal, and help you get to the end goal from there.
Yes, the key is suitability. What is a suitable product for you and for your long-term goal? Even if it's for the next 5 years, what is suitable for you? What can you sustain, even in an environment where we're seeing now rates go up at 3%? Because before, pre-COVID, 3% was normal. We were lucky during the pandemic to see these low rates, but 3% was the normal rate that you would get on a fixed term. So I think the key thing is really suitability. And also, Sandy, you know what? I think that the condo market, my prediction is that the condo market is going to come back, especially, like you said, immigration, we're bringing, there's a lot of immigration pent up traffic right now, especially with what's going on in Ukraine. So new immigrant, schools are reopening, university are reopening.
Yes.
So
Huge.
I think that we also, I know I'm a big believer that we still need some foreign investment. So I think that having these international students coming to school, buying a condo instead of staying on residence, that is going to play key into reestablishing also the condo market. I really believe that the condo market, it's going to be uh, pimped up. That's going to be a
Yes.
driving force now versus the housing market, just because everybody's kind of moved out, you know. So I think people that are going to want to, gas prices are so high right now. So the average person may actually, who has to travel, may prefer to actually live downtown than
Yeah.
having to travel and pay for the that gas prices. So the condo market might actually start re-picking up.
Yeah, I think you're right about that actually. And it has picked up, it has been slowly picking up. But I think you're right about that because we have to think about that. A lot of like all the schools being closed, and once they open up, those students need places to live. And there's not enough housing on any of the universities, whatever. So I think you're right about that. That's a big factor. And then that plays into everything because when you don't have those first time buyers buying the lower, like the lowest price on the rung, you can't, nothing moves upwards, right? So that's where we have problems with real estate when we don't have first time buyers. So I agree. I think that will pick up for sure. Yeah, I think there's a lot of, there's just so many dynamics right now. It's so like, it's such an interesting time. I think we're really like almost like when COVID first hit and we were all like, what is going to happen? Like we had, like as a team, we sat down and said, okay, like, what do we do here? We have two choices. We just go like full steam ahead because there's always people who have to move, or we go sit at home and wait to see what happens. And we chose to keep going full steam ahead, which obviously is what we'll continue to do now. But it's a really interesting time right now. It'd be really, interesting to see what happens and how this all plays out.
Yes. And I also think that because the world has reopened now, you
Yeah.
know, builders are able to, I mean, we still have a lack of supply or it's limited,
Oh,
but
yeah.
builders are back on finishing their condo contracts and, building all the units. So I think that new construction, we're also going to see those new constructions being completed. And that's also going to drive the market. So I think that also, for the people, for the person that's a little bit more cautious, that's not risk adverse, and is like, I'm looking for to buy even an investment property, but I'm not sure why now I want to wait. I can see those buyers actually putting into investing into pre-construction.
Yeah.
And some of the pre-construction are actually coming to completion right now, or maybe in a year or two. So it gives them time to, on pre-construction, most builders ask you to actually put upfront 20%. So by the time
Yeah.
it's done, you already have that 20%. The key is to find out, can I afford to carry on that mortgage payment in the environment that we're in right now, where rates are at above the 3%.
Yeah. But I think we need to put that in perspective because like you said, this is where we were pre-COVID. And
Yes.
this was not a high interest rate. I mean, anything under 5% realistically, well, anything under 10% is realistically not bad, but we've seen such low interest rates for so long that we're not used to those higher rates. And you're right, because as as the price comes down, I kind of liken this to like the gas. So when you buy gas and it's, when it hit $1 a liter, it was unfathomable. Whereas right now, if it hit $1 a liter, people would be like, wow, gas is so cheap, right? You know what I mean? So it's all like how that works. So we got kind of used to these rates coming down, and seeing the rates that we've seen over the last couple of years is incredible. Like that's unheard of. Basically free money at that. You're borrowing money for free almost to buy a house, which is crazy. So there's still lots of opportunities. There's still, the rates are still really, really reasonable, for home ownership for sure. So
Yes, I agree. And I think that I really encourage home buyers right now, especially first time home buyers, to really look at the 5-year variable. It's really, the variable is still very attractive right now.
yeah.
Some lenders are still offering very high discounts from like prime point 0.8. So you would still be ahead of the market So do not be discouraged. I think that people are a little bit discouraged because, especially for some home buyer, because of the fluctuation of prime, but
Yeah,
really, you still will be at the head of the market. So it's something to consider. And also the great thing about the variable term is that you can always lock it in to a fixed term. So if you
yeah,
have 4 years left and prime goes up and you're feeling a little bit nervous, then it's the right time to consider. You have that option to switch, and there's no penalty to switch from variable to fix as long
yeah,
as you lock in within the remainder of the term that you have left.
yeah. And I always say to people, like, I think it comes down to your comfort level, right? Like, if you're going to be in a variable, even though, studies will show that you're going to be ahead of the game over that term, but if that's going to keep you up at night, don't do it. Like, just do what you're comfortable with. That can, so you can budget or whatever, if that's what you want to do. I think it just really comes down to your comfort level.
Yes, I agree. I agree.
Okay, we're going to wrap this up, but I want to put your contact details in here. So tell me so if anyone has any questions for Christelle about your own personal situation or interest rates, things like that, anything to do with that, Christelle can help you. I'm going to put your number in here. So tell me your number.
Yes, my phone number is 647
Yeah.
896 2575. And you can also email me at christelle.mwamba@mortgagescout.ca.
Okay, I'm at mortgagescout.ca, right?
Yes.
Okay. So anything else that you wanted to say, kind of just to wrap this up while I add that in there?
Don't be discouraged. It's always the right time.
It's always
Buy,
yes.
get a pre-approval, key, lock in the rate, and work with your realtor.
Yes.
Like Sandy.
Yeah, and work with your. Oh, that's Sandy.
Yes, real estate is still a good investment, and yes, prices have gone up, but it's still a right time. You just have to work with an excellent team, and like we talked about during this conversation, it's all about affordability and suitability.
Awesome. Thank you, Christelle. I look forward to talking to you in a few weeks. And yeah.
Thank you, Sandy. Have a great
Take care.
day.
You
Bye.
too. Bye.